Hello there. Welcome back to Cost and Management Accounting N6. In this video, we are going to look at the question paper, still working on the question paper of November 2023. So we're going to look at the first question in that question paper, that is question 1. So we're going to go through what we have. So question 1, here, first part, which is 1.1, reads various options are given as possible answers to the following questions. Choose the answer and write only the letter A to D next to the question number in the answer book. But according to this video, we are just going to indicate the correct answer according to the multiple choice that we are given. The first question is reading costs that are related to the contract except direct materials and direct labor. So remember, our costs can be direct and indirect. So which means according to the responses that we have, the most appropriate response that is there is indirect contract cost. So we are going to indicate our indirect contract cost as the answer there. Then we can go to the next question, that is on 1.1. Point 2, and the question reads, a dash will serve as proof that production may commence. Remember, when production is commencing, there's a proof that is sent, that is a production order. So a production order becomes our appropriate answer that we have on 1.1.2. Then we can move on to the next, which is 1.1.3, advantage of percentage of completion method. So we can go and look at the percentage completion method, and see that according to the answers that you are given there, the most appropriate answer that we can pick there. So the most appropriate answer that they would see that the percentage of completion method is an advantage that income is matched at costs in the period in which they arise. So we can see that C is the most appropriate that we have there. Then we can move to the next one. Manufacturing overheads are covered at a rate of 125% of direct material costs. If applied overheads amount is 50,000, how much direct material costs is the figure that is being asked with this question. So we can try to see how we can calculate that one. So what does it mean? It means our 125% is being represented by our 50,000 rands. So the one that is being asked is the 100%. So we are just saying our 1.5% is equal to our 50,000. Then the 100% is the one that we are looking for. So what do? We just say what we don't have, we put it as a numerator, what we have as a denominator, then we multiply by the given figure there, which is 50,000, sorry, which is 50,000 there. So you can just try to calculate that as such, see what we get there. So here we've got 50,000. So if you calculate correctly there, you'd see that you are going to get your 40,000. So you see that the most appropriate that we have, the correct answer that we have is D, which is 1.1.4. Then you go to the next one, wastage of material will result in, when waste material obviously is going to be a negative position that we are going to have in the way, it leads to an unfavorable material quantity variance. Unfavorable material quantity variance, since some of the materials are used, we are going to have actual material use being greater than the standard material, or the expected material that we are expecting to use. So it's in unfavorable position. So this is what we have in terms of 1.1.5. Then we can go to the next one. Let's try to see in terms of 1.1.6. The question reads, if fixed overheads expense variance is an unfavorable variance of 5,600 rands, in budgeted fixed overheads amounted to 56,500. Actual fixed overheads will amount to, you'd see that if it's an unfavorable position, it means the actual is going to be greater than the budgeted. So it means obviously this 5,600 we're going to add it to 56,000 and 56,500. So basically what we are saying, we are going to say your 56,500, then we add 5,600. But if it was a favorable, it means we are going to give an actual being less than the budgeted. So we are going to subtract. But in this case, we're going to add. So if you add the two here, you'd see that you are going to get your 62,100. So this is what we have in terms of the second part, which is on the second part of the multiple choice there becomes the correct answer, which is B. So we are going to indicate our B. Then we go to 1.1.7. One of the following is not represented in the break-even graph. So remember, in the break-even graph, we can go down according to the responses. Profit and loss on the break-even graph is shown. Remember that the area that we have between the total cost curve and the revenue curve above the break-even point. We are seeing that it indicates our profit, and below it's loss, so it's correct. A loss is shown. Remember, we are looking at one that is not represented. So you can go down. Break-even quantity and break-even value are always shown there. And then we've got total costs and total sales. We have them on the break-even graph. And then marginal income and gross profit are the ones that are not shown. So we can indicate our D as the most appropriate answer that we have there. Then we go to the next one, 1.1.8. This budget is used to determine how many this budget is used to determine how many units of finished goods need to be produced. Remember, when we are making budgets, we've got various budgets that we make there. But if you are looking at the number of units to be produced, obviously, you are going to look at the production budget. So this is what we have in terms of 1.1.8. Then we're going to move on to the next one. The price that contractors indicate they will charge a contractee when they are invited to apply to complete a contract. That is the question that we gave there. So you see that that is the tender price. So you see that this is the tender price, which is indicated by D. Then we go to the next one, which is 1.1.10. The cost of that portion of work that has progressed since the issuing of the last certificate is the question. So it's that uncertified work is the most appropriate answer that we have there. So we can indicate it as A. So this is what we have in terms of the first part of the question. So on 1.2, we say indicate whether the following statements are true or false by writing only true or false next to the question number. That is 1.2.1 to 1.2.10 in the answer book. So we have got the first one, which is saying direct material purchases will be credited to the material control account, which is not correct. It's supposed to be debited, as it indicates that they are going to increase the value of material that we have. So it's debited. So this one, obviously, we are saying false. Then next one, if the contract is complete on the credit side, you will record certified work and uncertified work, which is not correct. They can never be on the same side. So we are saying again false. Then we go to the next one. The management prepares the capital budget to make the best possible decision concerning the purchase of non-current assets, which is correct, which is true. Then the next one, according to the process-oriented cost system, the costs are collected separately for each product being produced, which is not correct. We can indicate it as false there. Then we go to the next one. The master budget contains only the summary of budgeted income and expenses for the year, which is not correct again, because remember the master budget contains various budgets. So this one false. Then we have got 1.2.6. If the percentage of completion is less than 100%, contract is incomplete, which is true. It is incomplete. Even if it's not complete by 2%, it means it's not complete. So this is what we have. Then a loss on sale of fixed assets does not affect the cash budget, which is correct. Remember, loss or profit or sale of assets is a non-cash item. So we don't include it in the cash budget. And other non-cash items we have is depreciation. We don't include them again. Even provision for credit losses, we also not show them in the cash budget. The cash budget shows only actual movement of cash in and out of the business. So on 1.2.7, we can say true. Then go to the next one, 1.2.8. According to the absorption costing method, fixed costs are covered on the basis of the number of units sold during the periods, which is false. So we can indicate false. The contractee is the person responsible for doing the work on the contract, which is not correct. The contractee is the one that has a work that is being done for him or her. So here we say false. Then we go to the next one, 1.2.10. Subcontractor fees are treated as a contract cost and credited in the contract account, which is not correct again. Then false. So this is what we have in terms of the section of true or false. Then we go to the next one. Cite the information below and calculate the cash received. So on that one, which is 1.3, the cash received, the formula for finding the cash received. So we can just indicate there, this is 1.3. 1.3. 1.3. So cash received is the one that is being asked. So the formula that we are going to use there is the certified work. Certified work, and then we subtract our tension man. So for our certified work, the amount that we have, we can just recheck there in terms of the certified work. We've got 890,000, then our tension man 55,000. So we can just substitute in the formula that we have. So we are saying 890,000, and subtract tension, which is 55. And then we get the answer that we're supposed to get there is 835. 835,000 is the answer. So this is what we have in terms of 1.3. Then we go to the next question to see what does it say. Start the information below and calculate the total production cost. Start the information below and calculate the total production cost. So maybe we can indicate it in the form of a statement. So let's just say this is 1.4. So this is calculation of production. Calculation of production cost. Let's see. We are calculating production costs. So we can just indicate to you that we are calculating production costs. So this is what we have in terms of calculation of production costs. Right. We are going to start with the opening balance, which is our balance BD. Remember, we are given it there is it's here 45,000. So we are saying here 45,000. And then we are going to include our material and our labor, 120,000 for material, 90,000 for labor. So we're saying material, 120,000. And then we've got our labor, which is 90,000. So this is what we have. And then I think we've exhausted what we have in the balance that we are given. Then additional information is saying manufacturing overheads are covered at a rate of 5.50. They are recovered at a rate of 5.50. So we are just going to find the actual amount that we are supposed to put there. So we can see that they are recovered at the rate of 5.50 per direct labor hour. So what it means, we need to find the number of labor hours that we have, then we multiply by this rate of 550. So we see that the total value that we have there is 90,000, 90,000, and then we divide by the rate per hour, which is 10, to get the number of direct labor hours. So if you divide there, we're going to get 9,000. So if to get now the manufacturing overheads or the applied overheads, you're now saying 9,000 times 550. 9,000 times 550 to get that one. So we are saying now applied overheads. So in brackets, we are saying 550, and then we multiply by 9,000. Let's try to see. If you multiply the two, we are supposed to get 49,500. So here we are saying 49,500. So this is what we have. And then we can now add to get the total production cost. So here we are saying the answer that we are going to get there is going to be our total production cost. So this is the figure that we are looking for. So you get this one, 45,000 plus 120,000 plus 90,000 plus 44 plus 49,500 are there, and then we get our 304,500. So here 304,500. So this is our total production cost. So this is what we have put into this question. Then we can move on to see what we have in terms of the next question. So if you come here, we'd see that this is our next question. It reads, calculate the missing figures in the following incomplete variable budget. Write only the answer next to the question number in the answer. So we are given cost details, machine hours, and then this is the information. So the missing figures are the ones that we want to find. So basically, we're just going to use proportion there. Let's start by 1.5.1. So we are now on 1.5.1. So on 1.5.1, we are saying we are given a number of hours there, machine hours there for 1.5.1. We are not, what we are seeing that it's, we are having our 2,500 there. So the figure that we need is 1.5.1 here, and it has 2,500 hours. And then the other one that is given in line with 1.5.1, we've got 50, this one, which is the direct material for 50,000 rands, which is coming from 4,500 hours. So what we are saying is 4,500 hours is equal to 4,000 is supposed to 50,000, sorry, 50,000 rands. So the one that we need is here, which is our 2,500 hours. This is the one that we need, which is a question mark. So we want to find this value. So you can just use proportion there by saying what we don't have as a numerator, what we have as a denominator, and then we multiply by the given figure, which is 50,000. So calculate it correctly, you are going to get 27,770. 7.77. So we can round it off to the nearest one number there, whereby this 7 is going to change this 7 to become 8, and then it becomes, our answer becomes 27,778. Like this. This becomes 1.5.1. Then 1.5.2 again, we can do the same proportion. Find our 1.5.2. Now we are working with 3,000 hours. So we are saying 1.5.2, we are saying we also have our 4,500 equal to 50,000. And then the one that we need is 1.5.2 here. So we've got 3,000. So we are saying 3,000 equals to question mark. So we are saying 3,000 over 4,500. Then we multiply by 50,000 over 1. So when we multiply it correctly, answer that we are going to get there to the nearest one number becomes 33,333. This is what we have. Then 1.5.3 is now here. We are given 95,000 equal to 3,000. So then we are looking for 2,500. What is the answer? So we are again going to calculate it using proportion. So we can try to see how we can calculate that one. Right. Let's try to see what we have there. We are now on 1.5.3. So we are saying 3,000. This 3,000 is equal to 95,000. It's equal to 95,000. So what about the figure that we want is here, 1.5.3? So we have 2,500. We have 2,500 equals to question mark. So what we are saying, what we don't have always becomes a numerator, and what we have becomes a denominator. Then we multiply by 95,000 over 1. So you calculate that one, and the other that you are supposed to get to the nearest one number becomes 79,167. So this is what we have. So we can as well go and calculate the next one, which is 1.5.4, which is here. Proportion again. Use proportion again there. Right. So this is what we have. So we are going to go to 1.5.4. So it's here. We are again saying 3,000 equals to 95,000. So the one that we want is 4,500. Question mark. So we are saying 4,500. $4,500 equal to we are looking for the figure for 4,500. So we are saying 4,500 there as our numerator, and we divide by 3,000. 95%. Then we multiply this 4,500 divided by 3,000, then we multiply by 95,000, and then we are going to get 142,500. So we are saying 142,500. There comes our answer. Let's just try to verify that figure. We're saying 4,500, then we divide by 3,000. Multiply by 95,000. 142,500 is the answer, 1.5.4. Then we go to the next one, 1.5.5. Again, we use again the same proportion. So we are saying 1.5.5. We are saying again, we are here now. You can use this one. 10,000 is one that is given. 2,500 is equals to 30,000. So the one that we need is here, 30,000 with the question mark. So it becomes the numerator, then the other one is denominator, multiplied by 30,000. So let's try to calculate that one. Let's try to calculate that one. So if you multiply it correctly, there, that is 1.5, we're going to get 36,000. Then obviously we are now going to 1.5.6. On 1.5.6, we are having, we are having again 30,000, 2,500 being equal to 30,000. The 4,500 is the one that we need here. So what are we going to do? We are just going to make a proportion where we're saying 4,500. 4,500 is the one that we need, but we are given 2,500 equal to 8,000. So we are making that proportion again. What are we saying? We are now saying 4,500, which is unknown, is numerator, divided by 2,500, multiplied by 10,000. Multiply that one, try to multiply that one, which is now 1.5. Let's try to see. It's now 1.5.6. So let's try to calculate it. Terms are 54,000 rands. So here it means we've got 54,000 rands. So this is what we have in terms of that table. Then beneath that, obviously, we have something which is 1.6. We can try to see what we have there in terms of 1.6. So on 1.6, it's saying use the following information to do the calculations below. We are given total cost, net profit, marginal income, and then on the question part is saying calculate first part, the variable cost. So we want to see how we can calculate those ones. So the first part is on calculation of the variable cost, but according to the information that we are given here, we can have two formulas that we have there. Remember, we can say revenue minus variable cost, get your marginal income. Then for marginal income, you say marginal income minus fixed cost now. Then you get your net profit. So this is what we have. So it means with these two formulas, the figure that we want is variable cost. So for us to find variable cost, now we can make it start with the formula there, whereby now it becomes a variable cost is equal to we can use is equal to, if you make it start with the formula, it means we're going to say revenue minus marginal income to get our variable cost. But we can also find it by saying variable cost plus fixed cost. Remember, variable cost plus fixed cost will give us our total cost. Variable cost plus fixed cost becomes give us our total cost. So if you make variable cost start with the formula again, it can be variable cost equal to total cost minus fixed cost. So to find this one using the first formula, to find variable cost using this first formula that we are having here of saying revenue minus marginal income to get our our variable cost. You see that in the question we do not have revenue, so it's going to be a problem, and we are not given the pickup of revenue there, so it's a problem. Then we can opt for this one, the first method, this one the second method. So on the second method, on the second method, what we are saying is we can first find variable costs. We can first find we can first find fixed costs, and then we subtract it from total costs. So to find our fixed costs, we can use this formula that we are having here, whereby we are saying if you make fixed costs subject to the formula there, it's going to be fixed costs equal to marginal income minus net profit. And you see that those are two we are given it here, marginal income is here, net profit is there. So what we are going to do, we are just going to do a search whereby we are saying marginal income minus net profit. So if you say marginal income, we are having 600,000. We are having 600,000. And we subtract net profit that we are given is 200,000. Then we get your fixed cost of 400,000. And remember, we've got this formula of saying to get our variable cost, total cost minus fixed cost. So we can get our variable cost now by saying, we are now saying for our variable cost, we are using that formula of total cost minus fixed cost. So we are saying total cost we are given it here is 500,000. So we are saying our variable cost now is 500,000 minus net profit, which is let's try to see 200. Let's see. We are saying marginal income minus net profit. So if you subtract the two, let's try to see there our marginal income. Let's recheck our figures. For marginal income is 600,000. Sorry, our marginal income is 600,000, not 500. So we are saying our marginal income is here, which is our 600,000. So we are saying 600,000 here, and then we subtract our net profits. Let's try to see the correct working that we. So remember, we are saying to get our variable cost, we are saying total cost minus fixed cost. So total cost we are given it here is 500,000. Sorry, it's 500,000, and then we subtract the fixed cost is the one that we got here, which is 400,000. And then we are going to get our marginal, our variable cost of 100,000 rands. So this is what we have. So this is now our variable cost on the first part of variable cost. Then fixed cost, we have already calculated it here. It's 400,000. We say marginal income minus net profit to get our fixed cost. Then total sales. Now to get our total sales, remember we have a formula that we put there, whereby we said, and we say sales, which is the revenue. When you subtract the variable cost, you get marginal income. So we can just use that one, whereby we are saying total cost now, total sales. We are now saying if you say sales minus our variable cost, you get your marginal income. So the figure that is we want to find the sales. So if you make sales out of the formula, there it becomes a marginal income, marginal income minus plus variable cost. If you take variable cost as the other side, it becomes a positive. So we're saying plus. So the figure for marginal income that we are having there, the figure for marginal income, remember it's there, it's 600,000 here. So we are saying here, we are saying 600,000. And then we get your variable costs. Variable cost, we calculated it there. And what did we get for variable cost? Let's try to see. Variable cost is 100,000 here. So variable cost, so here we're adding 100,000. So the figure that we are going to get for sales now is 700,000. So basically we are saying it's equal to 700,000 rands is our sorry, as our sales. So this is our sales figure. Our sales or this or the revenue figure is now 700,000. So this is what we have according to this part of 1.6.1, 1.6.2, and 1.6.3. Then the last question that we have there is on giving full advantage of standard costing. So we're just going to list them. Advantages of standard costing. This is 1.7 now. 1.7, we can just list these advantages. The first advantage is that it controls costs, and then the second one, it facilitates the calculation of accurate budgets, facilitates calculation of accurate budgets. So this is what we have in terms of the second point. Remember, the question needs 4. So we can move on to look at the third one. At the third one, we can say it reduces manufacturing costs. It reduces manufacturing costs. And the last one, it's an aid to management, to decision making. It makes decision making simple. Aid to management decision making. So this is the advantage that we have in terms of standard costing. So this is what we have, guys, according to this question 1 of November 2023. Those who haven't subscribed, please subscribe and share. We're still coming with more videos. As for this video, I'm signing out, and we'll meet again in the next video.